Welcome back to Tech Tune-Up. As always, I'm your host, Paul Meeks. Today is November 18, 2025, and it has been a bit. I just got back from Cyprus, the island in the Mediterranean, where I was sent to speak at a conference hosted by The Economist magazine for my investment bank, Freedom Capital Markets. So I've been traveling like a madman, but I've been following all the news. And we have a shitload to talk about today, at least in the short term. The AI infrastructure trade has turned against us. Nobody is supporting it here at the bottom but me, and I'll get into those details in a second. If you're going to make money, you got to be aggressively contrarian. And sometimes these Wall Street analysts, when they see the stock going down, they make up fundamental reasons why it should go down and lower the price targets. And then, of course, the opposite on the way up. Nobody is giving you leading intel, just trailing intel. So let's get to some of the stocks, and then I'll make some more concrete comments about strategy going forward. Nvidia reports tomorrow, and I say this every quarter, but it will be a biggie. And I actually think here's what happens. Jensen Huang, the CEO, will make you feel much better about Nvidia itself, its quarter reported, and its go-forward guidance. And by doing so, will also make us all feel better overall about the AI infrastructure build-out trade. So with Nvidia getting hit in the last couple of weeks, as well as all these other stocks, I actually think we might have a relief rally. In the past, expectations were so high for Nvidia that even if they reported good results, sometimes the stock would falter. But the stock has been weak going into the print. I'm expecting a relief rally. The next one, CoreWeave, one of the leading neo clouds. I like this stock here at $74 a share. A month ago, it was at my price target, which I asked you to trim, 150. Now we're back here. And what was the culprit? The company announced earnings, and it guided 3% lower than its prior guide for its revenue guidance for 2025. That was the sin. Yet the stock went down over 30% last week, bleeding into this week. I think it's a gross overreaction. And I think CoreWeave, which I wanted to trim at 150, hopefully you did it, is now a better buy. Dell's a stock that's also been hammered as people start to doubt the AI infrastructure building trade because their servers go in these AI data centers. Now, the stock is going to have to find some kind of bid. I think it's probably at the 200-day moving average, which is 118. The stock right now is trading at 123. An analyst on the sell side yesterday downgraded both Dell and Hewlett Packard Enterprises, HPE, worried about margin pressure. I do think margins will contract over time, but again, another gross overreaction on the downside with Dell. So if you own it, I just keep holding it. If you want to buy it and you're not in yet, wait for it to stabilize at that 200-day moving average at 118. Oracle has been impaled as well, but I will tell you, I'm a little bit more creeped out about Oracle than some of these other AI infrastructure plays. So I'd probably stay away from that one. But I will tell you, the stock's trading at 215, and it also needs to show some stability at its 200-day, which is $209 a share. Netflix, I've been bullish on this one for a long time. I think that the only near-term risk with Netflix is it's going to make a bonehead move, and they might buy the legacy assets of Warner Brother Discovery. Now, if they get involved in a transaction and they end up just buying the streaming assets, I think that would be a great deal. But if they have to buy the whole enchilada to get the deal done, which includes the crappy legacy assets, then there could be even more pressure on Netflix. But at the end of the day, in video streaming, in entertainment, you want to own one stock. It's Nvidia. You just buy it on dips. You don't buy Disney. You don't buy Warner Brothers Discovery. You don't buy any of the damn cable companies. It's Netflix. I think AppLovin, a stock that I also asked you to sell, and we got to my sell target. Hopefully you trim some at least. The stock has gone in the other direction, despite the fact that the company had a great quarter, a great outlook. However, this SEC investigation, which has always been rumored, nobody's ever confirmed it, about their advertising policies and how aggressively they go after you on the internet, has brought the stock under a funk. I actually think when this is cleared up, and this rumor has been swirling since February of 2025, this stock will pop. This stock will pop, and I'm sticking with it. Next, Cisco, Revenge of the Nerds, right? We talk about the internet bubble and its popping, and the AI infrastructure bubble and its potential popping. Cisco was Nvidia back in those days. It was the world's largest market cap stock. It was the plumber of the internet, all of those switches and routers. But I will tell you, after being in the doldrums for decades, they're actually seeing, because of these AI data center buildouts, they're actually seeing some accelerated revenue growth. They actually might end up being a top line and bottom line double-digit percentage annual grower. And so I'm going to keep an eye on Cisco. You know, the stock has popped a bit, but it still trades at a less than S&P 500 multiple. It might be worth our attention. After all these years, just like IBM turned the corner when they started to show some revenue reacceleration, and also became essentially the go-to stock in the era of quantum computing, which is coming up next after AI infrastructure. I like Google a lot. Google was always under some pressure, thinking that its search advertising would go away as everybody searched on ChatGPT. Well, not so fast. They actually had a nice digital advertising revenue quarter last quarter, and I think that they're doing all the things, right? They're going to have a large language model that's going to be more than functional. They will lose some share, yes, because when you have 90% share of the search market, you can only lose share. But still, things are going quite well, I believe, at Alphabet. I like my Chinese tech stocks. I do think that Trump will do a deal, ultimately, with the Chinese. And we will clear up some things about tariffs. And more importantly, we will clear up some things about export controls. But in the meantime, I really like in Chinese tech, Alibaba, BABA. I'm going to be looking pretty carefully tomorrow night, though I will be live on the Nvidia call. I will follow after the fact the Palo Alto Networks call, PANW. But this will be an interesting tell for the cybersecurity play. I do not recommend anybody buy a stock in this environment on this tech tape ahead of a quarterly earnings, would that be Nvidia or Palo Alto Networks. But anyway, I want to see if the cybersecurity stocks, as shown by Palo Alto Networks results and guidance, are a place for me to hide if I get spooked out of the AI infrastructure building trade, which is primarily semiconductor stocks and hardware names. I like Boeing. Yep, sometimes I zig when the other guys zag, even within my coverage. You know, Boeing had a pretty nasty delay in their 777 program, but they've been finally given permission from the regulators to up their deliveries of the 737. Remember, the 737 was the brand that first got them in trouble with a couple of plane crashes in 2018 and 2019. I'm also looking at a couple of days. I actually think it's going to be next week, the results of Snowflake. I actually think they're going to be pretty solid. So let's go into some of my tech picks. I am not going to give you any color coding. Remember, green buy, red sell, yellow wait, because you know what? On this tech tape, as scary as it may be, even for companies that report relatively good news, I want you to stay away from it. But when we circle the wagons when we decide to go back in and buy with both hands. These are the stocks that I'm liking. AppLovin, Taiwan Semi, Meta, Nvidia, Snowflake, Uber, Robinhood, Nebius, which is one of the neo clouds, Microsoft, Netflix, Alibaba, I mentioned, Dell, CoreWeave, another neo cloud, Applied Digital, related to CoreWeave, Western Digital, Alphabet, Amazon. And so we have lots of opportunities, but we also have, in case you're freaked out by tech like I am from time to time, these are avoid tech stocks. These are places to hide. Take-Two Interactive, Raytheon, T-Mobile with a $200 buy limit. AT&T, believe it or not, is a hospitality company. KGC, Rent a Gold. Amphenol, Cocoa, which is a coconut water company. Believe it or not, even the Tech Analyst covers a coconut water company. Electric Power, Bank of America, Exelon, which is utility, General Electric, the old General Electric before it spun off into GE Aerospace. And we have TE Connectivity, and I mentioned Boeing before. So you guys, these are some stocks, and I'm doing some buying in these names in portfolios that shouldn't be all tech all the time because the client is not risky enough. Anyway, I think these are some great companies, pretty good places to hide until we get back in the tech game. So with that, let's talk about a couple of trends. I think this is super interesting. The last time we were together, a couple weeks ago, it was almost a slam dunk that the Federal Reserve Board at their next meeting on December 10th was going to lower rates by another 25 basis points or 0.25%. Now it looks like there's only about 40% chance of that. And you guys, you know why I always mention this every show, unless rates are low and falling, we kick away one of our crutches for the valuations of tech and other aggressive growth stocks. We need rates lower. Now with some sticky inflation in this country, with some continued worries about trade deals on or off, what is Trump doing this morning? That's going to be different than what he does this afternoon. All this has brought some angst, and it is no longer a foregone conclusion that we lower rates at the last meeting in 2025, which will be on December 10th. You know, I'm still freaked out. We've had many close calls, but we still do not have a deal on tariff and trade between the Chinese and the US. And as I've said before, I'm not as so much worried about the tariff bit. I always think that that's just a Trump negotiating tactic. But if Nvidia and our other companies that sell the GPUs are still prohibited from shipping those chips to China, that's going to be a problem for our AI infrastructure trade. That will not just be bad for the Chinese, it will be bad for us too. I'm getting a lot of questions about, has the AI bubble popped? I will tell you this, it is a little bit distinct, or more than a little bit distinct, from what I lived through when I managed the biggest tech fund on planet Earth when the internet bubble popped in 99, 2000. Back then, we had spending that got out of control. You could say that that's the case now too, but the spending was done by some shitty companies that had bad balance sheets. Also, in this particular case, we have a concentrated spending. About 90% of the AI infrastructure build to date has come from the 5 hyperscalers. Now, the 5 hyperscalers have very strong balance sheets. They generate a shitload of cash flow. And to a man, the CEO of each of these 5 companies swears that regardless of what's going on geopolitically and elsewhere, macroeconomically, that they see early and heavy spending on AI infrastructure as a key competitive advantage in this tech era. And so when Mark Zuckerberg tells you that, and he's the most ruthless dude on planet Earth, I believe him. So at some point, yes, we have to monetize these AI apps, but the spending will be fast and furious through next year and probably into 27. So if I'm just focusing, as I am, on the infrastructure builders, right? The axes and the shovels and the picks, then I'm cool because the spending will continue for at least another year. These stocks will go back up. I don't have to make any plays yet on the monetization of AI. So that's the way I'm playing it. That's why I think that these stocks that have been hammered recently, hopefully we get a little bit of relief rally when Nvidia reports tomorrow, are better buys. And remember, I said that because most of these sell-side analysts who are sheep are not supporting these companies as they plunge in price. So right now what I'm doing, and the reason I didn't have any color codes on my list is I'm not a fundamental analyst anymore. I'm a technical analyst. I know CoreWeave is going to come back, but do I buy it today or not? What I do with my technical analysis is I only add to positions or buy them fresh when they have these falling knife situations, when the stock has stabilized, at least for a couple of trading sessions, and it refuses to go down even more when the market is still going down, and its volume dries up. A technical indicator is either support or resistance when volume dries up. So I'm looking for companies to stop going down for a few trading sessions, for the volume on those days to be less than their daily average. And then I might have the balls enough, but I don't right now, to catch one of these falling knives. So with that, let me take a couple of questions. I'd like to hear your thoughts on natural gas. I'm in favor. A couple of stocks that I'm waiting to buy more of and I already own are some of those derivative plays like Exelon, like Consolidated Energy Group. And so, yes, I'm looking at some utility plays that are going to power these AI data centers. And there are either one of two flavors of ice cream, nat gas, as you say, or nuclear. Great question. Micron. I like Micron, right? People hated it. The stock went all the way up over 200. Even though it's over 200, when I gave a $200 price target for that stock when it was trading at 50, people thought I was on acid. But it ended up happening. And actually now, Micron might be one that I want to buy when this tech wreck has run its course, because now I actually think it might be worth 300 because the supply is super tight for the chips that are the storage, either NAND flash or DRAM for AI infrastructure build. So I actually say, yes, I would buy Micron on a dip. I think it can go to 300. And if you hold the stock, of course, even as it craters here a bit, you just hold it. Just hold it. I think it's going to be a good one. Thank you. Also, I noticed that you don't have Arista Networks as a tech pick. I've been in ANET before. The stock did very well for us on this particular program. I still look at it, but one of the things, as I told you before, I've become a little bit more enamored with Cisco, because Cisco was always the poor man's Arista Networks. I'll have to check at the valuation, but over time, if both Cisco and Arista Networks come down a bit, I think they're probably both better buys. What I would tell you with that particular stock, if you own it, I just hold it. Let me do some more work to see if you should add to positions, because it could be well under your cost basis as all these tech stocks have come in. All right, guys, that is it. Fast and furious, hopefully value added and impactful today. I'll look forward to seeing you next week.